Airbnb, the much anticipated IPO, and it's finally happening. It's a company that a lot of people are interested in buying, but most are unsure on what a fair price is to pay at IPO. In this video, I'm going to be running through my valuation of Airbnb and how I got there. I'm going to assume that you know the basics of what Airbnb is and what services it provides, and focus more on the valuation or growth story. I will, however, touch on Airbnb's business model and how it's disrupting the industry. This will be key in determining what the future may look like for Airbnb. Okay, so I'll quickly show you the valuation that I've come up with. As you can see, our assumptions are here. If you want to pause and take a look at what the drivers are, then please do. But fundamentally, I've got revenue growing at 23.8 compound annual growth over the 10-year period. It's actually 18.5 if you factor in the 2020 drop. Revenue driven by the GBV numbers, gross booking values. I'm saying they're going to get to 138 billion by 2030, which is a 9% capture of their total serviceable market, which is 1.5 trillion. About 40% above Expedia and Booking.com, and that gives us 20 billion of revenue in the final year. So we're going to say they're going to get from 4.8 to 20 billion. It doesn't seem too much of a stretch in 10 years' time. And then that gives us about 5 billion of EBIT as well. Now, we're going to be using an EV to EBIT multiple for the terminal value. As you can see over here, I've gone with 24 times. The way I've calculated this, I've just taken a relative valuation, got the average of the hotel industry, which is the most comparable total industry, and the US market. These numbers here I've not factored in because they're pretty damaged at the moment from COVID, and in normal times they were up in the mid-30s, so I thought that was actually a bit too high. So I didn't factor them in. I think 24 is fair to run with at the moment, and of course this is just a base case scenario. We're not being too bullish in this one. Now, our free cash flows, obviously this is a DCF, so we are factoring in what free cash flow we're going to be receiving. I haven't actually got them making positive free cash flow until 2025, based off of the amount of reinvestments and capex they're going to have to make to, continue this growth into the future. So we've got a total of 7.8 billion of free cash flow coming to us in the 10 years. Obviously, that means the majority of the future cash flows are going to be from this terminal value in year 10, about 90% actually. So as you would expect. Now, this is the value I'm coming up for Airbnb, coming up with for Airbnb in 2030. Obviously, we're less the debt plus the cash on that enterprise value. That gives us 132 billion in 2030, or a share price, if we go off the shares outstanding we have currently, of 223. But let's stick with the full price for the business at the moment, because the shares outstanding are tough to actually estimate at the moment. They're quite up in the air. So I'm actually getting an intrinsic value today of 30 billion for Airbnb based off of this forecast that you see here. Now, this is off a required rate of return or discount rate of 15%. I always use quite a high discount rate just because that's my minimum required rate if I'm going to invest. I don't want anything less than 15% return. Now, we could drop that down to 12, and that's more normal rate of return, or a market average, you could say. That gets us to about 40 billion intrinsic value. Don't mind this for the moment. This is just with a margin of safety. If you wanted a margin of safety in case there was any errors in the valuation. But if we just run with the intrinsic value for now, see what fair value is, we're saying either 40 billion at a 12% discount rate or 30 billion at a 15% discount rate. Now, if we look at that in an IRR, depending on what we buy the company for, I think they've most recently said that it's going to be going for 42 billion, or around 40 billion they're going to be floating it at IPO. Now, not the most attractive return, as you can see here, based off of that 10-year IRR, saying that if we buy at 40 billion or around 40 billion and they achieve what they have done here, which is get to 20 billion in revenues, 5 billion of EBIT on a 25% margin, and with the free cash flows, obviously, all here, we can expect an IRR of 14%. Now, it's a market-beating return. It's not exactly what you'd be looking for if you're investing in a higher growth company and young company like Airbnb. You'd expect a higher IRR, as it doesn't leave much room for error. But just quickly, I wanted to show you if it does actually go lower than 40 billion, let's say that it drops down to the 30s like it was originally going to, then as we start dropping this down, let's go to 30 billion, 32 billion, let's say. That gives us an IRR of 18% over the period. And, you know, we're closer to the intrinsic value or fair value that we've got for the company today as well off of the DCF calculator. Again, this is the base case. We'll talk a little bit more about Airbnb and how Airbnb is being disruptive. And then we'll try and come up with a bull case as well. And I'll do that maybe in a separate video, but we're going to come up with a bull case scenario and look at, you know, how much more upside could be left for Airbnb. Okay, now I want to touch on the story and how I got those numbers. So firstly, let's assess Airbnb's business model and how they make money from bookings. So Airbnb connects hosts who own houses and or apartments with guests who want to rent them for short-term stays. They facilitate the booking with a user-friendly platform to search, reserve, communicate, and make secure payments. So they have two core models. First, the individual host model, as you can see here. They take a fee from both the host and the guest who's renting it. They also have an experiences part of the business as well. We'll touch on that in a sec. Professional host model as well, which is for facilitating hosts who own multiple properties or rooms and operate more like a small hotel. This is a newer model and it hasn't really taken off yet, but it's still early in developments. Now, if we look at how this translates into revenue and earnings for Airbnb, in Airbnb's primary model, they earn revenue upon check-in for a stay or experience from charging service fees to both the host and the guest. So it can range from a 3% fee for the host and a 6 to 12% rental fee for the guest. Now, these fees are calculated as a percentage of the booking value. Fees vary based on factors specific to the booking, such as duration, geography, and host type. As you can see from the demonstration that they provide in their IPO prospectus, they charge the host for facilitating the booking. This example shows 3%. They then charge the guest a booking fee, and this example here shows 12% per night. Pretty simple economics. Now, in the professional host model, they only charge a 14% fee of the booking to the host. That's the only difference. Of course, this host is, you know, more of a multiple property owner and maybe operates a small hotel-like business on Airbnb, so it's technically a different profile of client. They have extended the model to experiences, as I touched on, which allows hosts to offer an experiences during the stay for a fee, and Airbnb take a 20% commission on the cost of this experience. So as you can imagine, the real driver for Airbnb is growing the amount of bookings, the gross bookings that they have on their platform, as it's a commission-based business model. That's why, as you saw, GBV sits at the core of our valuation. So if we just draw this point back to the valuation, as you can see, I've estimated revenue as a percentage of GBV to reach 15% in 2030. It's currently at 14%, and it's been moving, you know, around 1 or 2% over the years as time goes on. And there's a little bit of a relationship between scale and the percentage commission that they're taking on overall bookings. Now, I believe that after 10 years or after year 10, they'll begin to expand, scale their offerings such as experiences, travel and professional hosting. And then overall, they'll take a higher percentage of booking value. So I've not gone too high up, but I'm saying 14 to 15%. And as you can see, that's how we get our revenue amount. Now, to get an idea of how successful Airbnb will be in growing its booking values and taking market share from the competition, we need to ask ourselves, how is Airbnb disrupting and improving the travel and hospitality industry? So to understand how Airbnb is disruptive, we first need to assess its market. And I see their market as the hospitality industry as a whole. But if we first segment this down to the global hotel business, then that gives us a total addressable market of about 600 billion. It's a good starting point, but due to Airbnb's model, they believe the hotel market actually understates their potential. So this is probably due to there being a larger supply of rental units than there are hotels and at a much lower cost of production. They actually see their serviceable TAM as 1.5 trillion, made up of global short-term stays and experiences. So to judge Airbnb on its ability to disrupt, let's assess first the competition in the hotel market. So the hotel business is very capital intensive due to the real estate component. Traditionally, they have owned the property and operated the business within that property. Therefore, they've had to purchase significant assets to scale the business, or worse, take on a lot of debt. More recently, some hotel companies have switched to a more capital-light business model, by transferring the real estate they operate in to an external holding company such as a REIT. So the hotel business is going to be more disrupted by Airbnb, in my opinion, just because it can't offer the same optionality as Airbnb in terms of location, pricing, accessibility, and availability. The hotel business can't really adjust its business model to start offering rental homes or short-term stays like others may be able to. They also are less defensive in times of economic downturn due to their more capital-intensive business structure. Now, the next companies we need to look at are the travel booking companies. Now, these are the closest to Airbnb's business model, as they primarily act as the agent or intermediary of the booking. So we're going to focus on Expedia and Booking.com for these two examples, as they're two of the largest in the segment, and they're both public companies. So start with Expedia. Although Expedia acts as an agent in most cases, they also earn about 40% of their revenues from merchant sales. This means that they buy blocks of hotel rooms at a discounted rate and sells them on, for a higher price on their website. This is actually a lower margin business than the agency business, but it does guarantee some revenue and sometimes offers an exclusivity to Expedia. Booking.com also does this, but on a much smaller scale. So therefore, the difference in their EBIT margins, you've got Expedia at 8% and Booking.com has a very nice margin of 35%. This was both in 2019. So if we compare this back to Airbnb's model now, we can identify a key difference here in Airbnb's model and these two businesses. You've got that hotel versus homeowner or commercial versus consumer business model, really. Both Expedia and Booking.com derive their revenues from existing hotels, although they have in recent years tried to expand into the apartment rental business without actually much success. Airbnb services a whole new client, in my opinion. They were the first really to introduce that home and apartment owner into this space, and it opens up their addressable market and introduces a new type of product to the customer or the guests or travelers. So summarizing Airbnb's potential to disrupt the hospitality industry. Now, nobody can guarantee that over time hotels will lose market share and therefore its booking providers will do also, but Airbnb's growth since inception does give us proof in the numbers that a transition is occurring for some consumers who have a preference for staying in a rental property rather than just a hotel room. Now, like I mentioned before, I think especially the hotel industry is going to really struggle to compete with Airbnb in terms of its pricing, in terms of its accessibility and the amounts of locations that it will have available. It's also got, better technology and investing more in technology. And in terms of the two travel booking companies, I just don't think, unless they make some significant changes, I don't think they're going to be able to compete with Airbnb either, just in terms of, the strength of Airbnb's brand versus the other two and the ability to scale. And also you've got the added benefit that, the founder, Brian Chesky, who's brilliant, is still there, still an owner-operator. We like that. And you're getting it for 30 billion when the others are selling for much higher than that. And in my opinion, Airbnb is a superior company to both of them, although not yet shown in profitability. I do feel that there is a significant market out there for Airbnb that has not yet been captured. And I think predominantly it's going to come from the hotel and travel industry. Back to the valuation that we done. Just want to touch on the EBIT margin. We may have done it already, but I just want to go off of when we've assessed the competition there and talked about these guys here really being the main competition for, for Airbnb. And if we look at their EBIT margins, we get a variance. So the hotel industry as a whole is at 14.2%, which is, quite good for them. It's mainly driven by a lot of them, like Marriott and people like that, turning to a more capital light business model, like I mentioned there. We've got Booking.com in the higher margin space because of its agency-like business model at 35%, and Expedia at 8% due to the lack of profitability they see off of that merchant business, in my opinion. Now, I think realistically for Airbnb, we can count out it being 8%. They've already shown in some years that they can be higher than 8% in some of the indicators we looked at. I think realistically, going off of what we see for Booking.com and what we see for the hotel industry, I think taking an average of the two is a fair EBIT margin estimate for Airbnb, and that gives us 25%. Now, 25% off of gross margins of 75% seems very realistic. That's fantastic gross margins that they have, and it leaves a lot of room for profit, or for bottom line profit for Airbnb, as long as they can, as they start to mature a bit, they spend less on sales and marketing and product development. They may not, if they're growing at a more significant rate than say 15% in year 10, then they may not be doing that. But if they start to mature and they can bring some of those expenses down, 25% should be easily attainable. Okay, so summarising what we've done and our valuation. Off of my DCF, I've got an intrinsic value or fair value today at IPO for Airbnb of $30 billion. Right, based off of a market cap of 132 billion in year 10 and a required rate or discount rate of 15%. Of course, this is my discount rate. Like we said, if we shift that down, it can go higher up to about 40 billion. Depends on what acceptable rate you're going to give yourself, what suits your needs. Now, these are obviously my estimates, my valuation. It could well be wrong. I will say that similar hype to IPOs, that are similar to Airbnb in terms of how disruptive they are, how widely used they are in the world. Different companies, but as you can see, they never really looked cheap at IPO. Everyone was saying how expensive they looked, and look at where they are now. So at the moment, they're panning out. They're looking to be good investments. So that may well happen to Airbnb, that maybe the fundamentals aren't even a part of it. But of course, here on this channel, we go off of the fundamentals and try and see if we can make the numbers work. That's what we need to be doing. Of course, I think if you can buy Airbnb at 30 billion, we know it's going to probably be more than that now. Then that'll be a great long-term investment. As you can see, 32 billion buy price here. Over 10 years, you could expect an 18% IRR, which is if you compound that over 10 years, you'll have a lot more money than you started off with. I can guarantee that. So we are going to be running a bull case as well, just to see if we're a little bit more bullish about Airbnb and what it can achieve into the future. Maybe we think it's going to grow a lot quicker. Maybe we think that that operating margin can expand slightly, or they're going to be selling at a higher multiple in year 10. We'll look at that in the bull case and see what valuation that comes up with. It's obviously going to be higher than the one we've got here, but that's going to be in another video. I'll do that. It'll be a quick video. It's going to be soon after this one goes up as well, so be sure to keep an eye out for it. But if you liked the video, found it useful, please like, comment, let me know what you think about Airbnb. Are you going to be buying it at IPO, or maybe wait until the price drops if it ever does? And subscribe to the channel for more videos. I'm going to have some more coming out soon, as well as that bull case coming out probably in the next day or so. And until next time, thanks for watching and good luck with your investments.